Welcome to the launch of Financial Capability and Asset Building in Africa, known in short as FCAP Africa. With the power of internet technology, we are gathered from around the world for this important event. Let me begin by thanking the International Consortium for Social Development and current president, my colleague and friend, Professor Manohar Pawar, for including this important launch in the biennial ICSD conference. Also, I thank our sister Center for Social Development in Africa, or known as CSD in Africa, at the University of Johannesburg, founded by my long-term colleague and friend, Professor Leila Patel, and now directed by Professor Lauren Graham. As director of the Center for Social Development at Washington University in St. Louis, I highly value our relationship with CSD in Africa, and we appreciate their leadership in hosting this conference. In addition, I especially thank our distinguished keynote speaker, Dr. Mahamudu Bawumia, the Vice President of Ghana. Dr. Bawumia's presence, along with other dignitaries and experts, underlies the importance and purpose of the FCAP Africa launch. We are grateful for his remarks today. FCAP Africa is a major new initiative to build financial capability and assets among families and communities on the African continent. This launch is a celebration of FCAP Africa and also a statement of vision, progress, and planning for the future. Fortunately, FCAP at work in the United States and East Asia provides some experience and lessons. For example, Singapore has already adapted an FCAP curriculum for social workers, and mainland China is planning a large investment in FCAP training for social workers. Countries in Africa can review and assess these experiences and then chart their own FCAP Africa agenda. I am pleased now to turn the program over to my other additional colleague, Professor David Ansong, distinguished scholar at the University of North Carolina, who has conceived of the FCAP Africa initiative and will give us an overview. Professor Ansong.
So thank you, Professor Michael Sheridan. I'm truly honored to co-lead the FCAP Africa initiative with my longtime colleague, Dr. Moses Okumo, in partnership with the Center for Social Development. So first, I want to thank launch speakers, conference panelists, ministers, heads of states, heads of institutions, and other dignitaries for honoring our invitation. I especially want to thank His Excellency Dr. Mahamudu Bawumia, the Vice President of Ghana, and also Professor Jan Baffour, former Minister for Economic Planning, Ghana's Minister of Finance, and lastly, Reverend Daniel Obami Tete, the Director General of the Securities and Exchange Commission, for gracing the launch of FCAP Africa. So we are here today because we share a vision. We share a common vision that seeks to improve the economic stability, security, and well-being of all people on the African continent. We know that economic inequalities is a serious challenge on the continent, and this is amplified by the ongoing pandemic, which has far-reaching effects on many lives. Currently, about 90% of the extremely poor live in Africa. So we do have a challenge on our hand. Africa's Agenda 2063, which many of you know, clearly outlines an ambitious continental goal to really address these challenges. We are convinced that financial capability and asset building are central to addressing these challenges. So therefore, any viable pathway to achieving the Agenda 2063 must target improvement in financial capability and asset holding for everyone. Individuals and households, as we know, become financially capable when they have knowledge and skills to act in their financial interests. Then also when their environment offers them the opportunities to act in appropriate ways that benefit their well-being. So this is where FCAP Africa comes in. So initiative is bringing together a network of educators, researchers, human service practitioners, financial service providers, and policymakers to adapt, test, and scale up programs and policies that promote financial capability, and also support asset building locally across households in Africa. So we will achieve this vision through a twofold plan. So let me just walk you through the two agenda items we have for FCAP Africa. The first involves enlisting human service professionals to enhance financial capability. So as we know, social workers, teachers, counselors, healthcare providers, religious and traditional leaders, and many other human service professionals engage directly with people, and they develop trusted relationships as they work to address human need. They're also well positioned to guide people in budgeting, managing debts, accumulating assets, saving for retirement, and making many other financial decisions. They're also ideally situated to guide policymakers and communities in creating effective policies that advance financial literacy, inclusion, and well-being. Unfortunately, all these potentials are not being realized because human service professionals are not currently trained with basic financial capability and asset holding practices to support the economically vulnerable. So FCAP Africa will equip these frontline professionals with basic financial knowledge and skills to empower vulnerable populations on household finances, and also incorporate financial capability in programs and services across Africa. So that's the first plan. The second is to integrate financial development content within financial services. So working with local partners in the financial sector, FCAP Africa will create comprehensive financial development content, incorporating financial education, coaching, counseling, and many other helpful financial topics in existing financial services, including FinTech platform. So in this way, we think that mobile money, group banking, agent banking, and other financial services will serve as mechanism for advancing financial literacy and inclusion. So the goal really is a sustainable change, and we hope to embed this in financial services within communities and online. So to date, I'm happy to note that the initiative has been joined by partners across several countries. We have Ghana, Kenya, Liberia, Uganda, and Sierra Leone. So our sincere appreciation to the Chartered Institute of Bankers, Ghana, the University of Ghana, the Uganda Christian University, the Uganda Institute of Banking and Financial Services, and many other partners across Africa for their leadership in planning this launch, but then also helping set the long-term agenda for this initiative. Right after this launch, just about, I think, 30 minutes or so, we'll be hosting several panels. We have 5 FCAP-related panels where scholars and experts from various fields will present their work on strategies to advance financial capability in Africa. So we strongly encourage all of you to attend these panels. So with that, I will turn to Reverend Dr. Kita Imbua. Thank you all for coming. We're grateful for your time.
So I'm Philip Abrodu Otu. I'm the Director of Research at the Central Bank, and I've been doing this since 2018. I think we at the Bank of Ghana deem it an honor to be invited to this virtual launch of the FCAB Africa initiative, which among others seeks to increase financial capability and asset holding to strengthen the socioeconomic conditions of financially marginalized populations in Africa. This is a noble cause. We support it, and let me commend the partners involved with this initiative. This morning, my task is to reflect on my role as a central banker, especially within the context of the FCAB objectives. At the outset, let me indicate that the issues being promoted by the FCAB are intricately linked to the mandate of most central banks. When a central bank delivers on its mandate, whether through conventional or unconventional means, the socioeconomic conditions of financially marginalized segments of the population can improve. From all intents and purposes, the global financial crisis and the COVID-19 pandemic has taught policymakers a useful lesson that sometimes unconventional policies also deliver optimum social outcomes. Gone are the days when a central bank's adoption of unconventional policies to deliver on its mandate or attain a certain socio-economic objective for the collective good of society was an anathema. Presently, central banks are caught up in the loop of implementing complementary monetary policies, either using traditional toolkits, and by traditional toolkits, I'm referring to interest rates, primary reserve ratios, and others, or employing the use of non-traditional tools such as forward guidance, quantitative easing, etc., to complement fiscal policy. Under these circumstances, the question posed is whether central banks are losing grip of their independence. In the scheme of recent developments, and when I say scheme of recent developments, I'm referring to how central banks handled the pandemic. In the scheme of recent developments, the answer is far and in between, because at the end of the day, both these toolkits, that is the conventional and the unconventional, are implemented to deliver the same objectives, i.e., to support economic agents of all classes in society. Central banks have a clear-cut mandate with either single objective or multiple objectives, but price stability always remains the primary objective for obvious reasons. Pursuit of this price stability mandate, however, has unintended consequences. When a central banker tightens monetary policy to moderate inflation pressures, oftentimes there are some trade-offs with growth. In addition to making credit expensive for businesses, the tightened policy stance also deters households' equitable access to funds, and depending on the asset holdings, can worsen the plight of the financially marginalized. Certain shocks also tend to throw a lot more people out of the economic and financial system, and thereby increasing the number of financially marginalized in society. To these events, central bankers combine conventional and unconventional policy tools to reduce the adverse economic implications on the populace. A case in point is the recent pandemic, which led to the implementation of accommodative monetary policies, as well as regulatory and financial reliefs to support households and firms and improve the situation of financially marginalized. Let me at this point briefly share the Bank of Ghana's experience with the deployment of policy tools to achieve its mandate of price stability and stabilizing the financial system in the face of the economic and financial shock that we just went through. The essence of the bank's primary objective is to ensure low and stable prices. A stable macroeconomic environment characterized by low and stable prices provides economic certainty for businesses and increases opportunities for the financially marginalized to relatively cheaper loans and credit schemes. This will help increase financial capability and asset holding of the financially marginalized. Bank of Ghana has achieved some successes on this front, and monetary policy decisions since 2017 have resulted in the gradual decline of inflation from that very high level of 15%, 15.4% at the end of December 2016 to 7.9% at the end of December 2019. Inflation has remained relatively flat, and the latest number that was reported for June of 2020 shows inflation at 7.8%. The COVID containment measures, such as lockdowns and restrictions on movements, triggered some inflationary pressures. It pushed inflation up to 10.4 at the end of December 2020, but like I just indicated, inflation has eased back nicely to below our central path. Ladies and gentlemen, promotion of financial stability as part of the secondary mandate of the bank seeks to ensure safe and sound financial system that engenders confidence for effective financial intermediation. It is this confidence and trust which ensures the seamless flow of financial resources to support economic growth. In this direction, the Bank of Ghana embarked on comprehensive financial sector reforms from 2017 to 2019 to safeguard the financial system. The reforms led to the revocation of some banking licenses, resolution and consolidated of some banks, recapitalization, and the issuance of directive to strengthen the regulatory and supervisory framework. This resulted in a well-capitalized and profitable banking sector, and indeed repositioned banks to withstand the COVID-19 shock that hit the economy in 2020. Last but not the least, the bank has crafted several policies to ensure an efficient payments and settlement system. The passage of the Payment Systems and Services Act 2019, Act 987, and the introduction of guidelines on electronic payment channels has unleashed the financial technology sector to deliver innovative products and services. These reforms have resulted in the rapid expansion of mobile money services sector. Mobile money operations have promoted financial inclusion in the country, with a sizable portion of the unbanked population now roped into the formal financial system. Furthermore, mobile money operators have developed microcredit and micro-insurance schemes that the financially marginalized can access to improve and sustain livelihoods. In collaboration with the government, the bank also implemented the mobile money interoperability that facilitated mobile money transactions across different networks. This has lowered the cost and enhanced business transaction. The world is changing, and it is changing very fast. Another issue that comes to mind is on how businesses have repositioned themselves in a post-pandemic era to do business. This brings to mind digital currency and how it is permeating all facets of our lives and the way we do business. The private sector has taken a lead in this area with electronic money and are swapping this for cedis with the banks constantly. Government is also jumping into the space and have succeeded in digitizing revenue collection flows with the banks. The central bank is also working on rolling out a central bank digital currency to complete the entire digitization loop. We are thinking about the implications of issuing a CBDC on the banking sector, the implication of issuing a CBDC on the transmission mechanism, the implication of issuing a CBDC on the financial system, the implication of issuing a CBDC on monetary policy, and on its implications for macroeconomic efficiency and welfare. These are big issues occupying our minds at the moment. Ladies and gentlemen, drawing lessons from the global financial crisis, central banks have added non-traditional monetary policy measures to their toolkits for ready deployment to prevent liquidity freezes across financial markets and in the event of a major shock. This has come in handy with the onset of the COVID-19 pandemic, which triggered the implementation of synchronized monetary, fiscal, and macroprudential policies across both advanced and developing countries, to provide liquidity to financial markets, as well as cushion the impact of the private sector, especially small businesses and low-income households. These have yielded positive results, and global growth has rebounded strongly from the adverse effects of the pandemic. In Ghana, a series of measures were taken to moderate the adverse impacts of the pandemic. In addition to fiscal reliefs to the health sector, as well as the socially vulnerable group, the bank implemented several policies and regulatory measures to ease financing constraints and liquidity pressures in the economy. In particular, we reduced the policy rate by 150 basis points in March 2020 and further down by 100 basis points in May 2021 to 13.5. The primary reserve requirement and the capital conservation buffers for regulated financial institutions were lowered. The bank also purchased a 10-year Government of Ghana COVID bond with a face value of 10 billion to augment government's financing requirements. And in response to the regulatory reliefs, commercial banks also extended reliefs, including loan restructuring and repayment moratoria for firms in the worst hit sectors. As the economy recovers, we need to begin to think about how to reverse these regulatory reliefs. But this must be done carefully to avoid the unwinding process being viewed in itself as a shock to the financial system. A careful balancing act will be needed here, and the central bank is thinking through these issues carefully. Ladies and gentlemen, as regulators and supervisors, central banks have always implemented policies to promote macroeconomic stability and ensure financial stability. For these measures to have a meaningful impact on the financially marginalized in the society, there should be complementary efforts from other key stakeholders in the academia, business sector, and civil society. There is the need for improved financial literacy for the financially marginalized to take advantage of the various opportunities created by the policy measures, especially with the current financial digitization environment that is emerging, which offers several opportunities for financial inclusiveness. On this note, I would like to congratulate FCAB Africa for this important initiative and hope that it goes a long way to complement the efforts of policymakers to help the financially marginalized in Africa. Thank you very much, and I wish you well.
Thank you. Very grateful for your time and the inspiring speech. We have Reverend Dr. Kitayimboah here, and we are grateful he's able to make it. So we will we'll go to you next, and then we will get back to our regular program, which would be Mrs. Sapo. So you can go next, Reverend.
Thank you so much, David, and greetings from Uganda, the land of the wise. You know, the East and the wise people, they always come from the East. I'm delighted to be with you this afternoon. I come to you from Uganda Christian University. I would like to thank the organizers, the conveners of this meeting. I would like to acknowledge the presence of all my fellow speakers and the sponsors, the partners in FCAB, all protocol observed. I greet you in the name of our Lord Jesus Christ. I come to you to speak about Uganda Christian University and our readiness to be a part of this great initiative under the financial capability and asset building program. First of all, as a university, our statement, our mission statement is to be a center of excellence in the heart of Africa. And as a mission, we want to equip students for productive and holistic lives. And when we think about what the FCAB is aspiring to do, we really fit into what you are envisioning to do. And as a theme for our education, we say we would like to train we want to offer a complete education for a complete person. And we think that training students in the area of financial capability and asset building is the right thing to do in Africa at this time. I would like to also paint a picture for higher education and say that COVID-19 changed everything, especially in terms of education on the African continent. It has given us an opportunity to reimagine and to rethink education on our continent, something that might never have happened 5 or 6 years ago is going to happen during and after COVID. And I think the financial capability and asset building initiative is coming at the right time. At UCU, we think that beyond the technical knowledge that we give to our students, there is a foundation of courses that each and every student should do. And one of these being writing and study skills. We train them in ethics. We train them in basic computing skills. We train them in health and wholeness skills. And when we heard about what it is that the FCAB is doing, we have moved to partner with you and would like to partner with you so that as part of our foundational training courses within our university is one in the area of financial capability and asset building. The higher education, the institutions of higher learning in Uganda and in Africa in general are churning out lots of graduates. But as you very well know, many of these graduates go out and they go out to be job seekers rather than job creators themselves. And one of the reasons why they do this is because they have no skills and experience in the area of financial literacy. They cannot manage their finances well, and in terms of building assets, they are zero. And therefore, we are looking forward to partnering with you with this great initiative so that we can equip all our students at the university in this great area. But also, one of the weaknesses we have noted is that our informal sector controls about 90% of our economy. And yet this informal sector is not trained in this very important area of financial capability and asset management. And so as UCU, we think that we shall work with you to customize and interpret this training in even some of our local languages that are majorly used in the marketplace, so that together we can lead in the training of professionals in this area. I just want to thank you for this great initiative, and I want to commit and to tell you that UCU is committed, fully committed to supporting this initiative. Let us reimagine it together, let us work together, and we believe that we shall be able to achieve all the aims and objectives that have been set under the FCAB. I thank you very much.
Thank you, Reverend Dr. Kitaimbwa. We are grateful that you're able to come on board. So we will turn next to Mrs. Sapo. I'll leave her to do the introduction, but she's the president of the Chartered Institute of Bankers. You can take over then.
Thank you, David, and good day to you all. The Chartered Institute of Bankers Ghana is very pleased to be the lead partner to the FCAP project on the continent and also in country Ghana. FCAP Africa is an initiative promoted by the University of North Carolina School of Social Work and also the Center for Social Development. We at the Chartered Institute of Bankers are excited because the objectives of the FCAP Africa initiative, tie in with the mandate of the Chartered Institute of Bankers Ghana to promote the study of banking and also regulate the practice of banking profession in Ghana. It is our expectation that this collaboration will significantly and positively impact vulnerable households all across. We are extremely thankful to Bank of Ghana, the Central Bank of Ghana, the Ministry of Finance, members of the Alliance of African Institute of Bankers, and other institutions for coming on board to make this program a success. Without taking too much time, I would like to introduce the keynote speaker for today's event. He is a renowned chartered banker. He chairs the Government of Ghana's Economic Management Team, which has responsibility for guiding and rebuilding Ghana's economy. He is at the forefront of a broad, inclusive development strategy in Ghana, involving the leveraging of digitized government services in transforming the delivery of public services. His efforts have seen the development of a supportive technology ecosystem, resulting, for example, in the rapid growth of fintech industry in Ghana. Our keynote speaker, ladies and gentlemen, holds a Bachelor's of Science degree in economics from the Buckingham University, UK, and also a Master's of Science degree in development economics with Oxford University, UK, and also a PhD in economics with Simon Fraser University, Canada. As a chartered banker and an economist, he has had a prestigious career, which includes 7 as a deputy governor of Ghana's Central Bank from the year 2006 to 2008, and the resident representative of the African Development Bank in Zimbabwe in 2011. He is a fellow of the Chartered Insolvent Bankers, Ghana. Ladies and gentlemen, I have the greatest pleasure to introduce Dr. Mahamudu Bawumia, FCIB, who has been the Vice President of the Republic of Ghana since January 2017 to deliver his keynote address. Thank you very much, and God bless you.
Ministers of State, the Governor of the Bank of Ghana, the Director General of the Securities and Exchange Commission, the President of the Chartered Institute of Bankers, distinguished invited guests, ladies and gentlemen. It is an honor to welcome you to the official launch of the Financial Capability and Asset Building Africa Initiative. I commend the Chartered Institute of Bankers, Ghana, for putting this initiative together. Your hard work has made this possible. This initiative seeks to engage financial service providers and equip professionals in broadening and deepening Ghana's financial stability, security, and the well-being of its citizens. As we have all realized, the subject of financial and social resilience has never been more salient and critical, considering the recent increase in the frequency and severity of crises with far-reaching impacts. Who is not daunted by the debilitating effects of the current COVID-19 pandemic on livelihoods and on economic activity in general? Thankfully, the dynamic leadership of President Nana Addo Dankwa Akufo-Addo's administration ensured quick responses and the acquisition of vaccines, which together with COVID protocols have helped restore confidence and slowly paving the way for a faster rebound of economic activities post-COVID-19. Ladies and gentlemen, I will address 2 critical questions in this regard. One, how have governments responded to the COVID-19 pandemic? And two, what new policies are governments considering to foster resilient national cohesion moving forward? On the first question, as to how have governments responded to the COVID-19 pandemic, the worldwide debilitating effects of the pandemic included disruptions to supply chains in production, economic slowdown, uncertain demand in markets, and the loss of jobs and livelihoods. Government and the central bank responded swiftly by deploying several fiscal and monetary policy measures to mitigate the economic downturn. These measures included an array of social economic interventions. The central bank ably did its part with liquidity easing, mindful of the effects of inflation on the economy. Through the implementation of the Coronavirus Alleviation Program, the government increased COVID-19 testing facilities from 2 to 16 and equipped several hospitals across the country with the capacity to test for COVID-19. Government covered the electricity consumption of over 1 million Lifeline consumers and subsidized 50% of the energy use of all other consumers for the period. Increased average monthly water supply by over 40% and provided free water supply to over 10 million Ghanaians. And government also disbursed some 412 million Ghana cedis to support over 270 businesses, which helped save over 650,000 small and medium-scale jobs. The Bank of Ghana, on its part, made commendable contributions in stimulating the economy during the COVID pandemic. Measures included an interest rate reduction from 14.5% to 13.5%, provision of about 7 billion Ghana cedis worth of support to borrowers in the banking sector between March and June 2020, a reduction in the primary reserve requirement of banks from 10% to 8%, the capital conservation buffer was reduced from 3% to 1.5%, and costs associated with mobile money and other banking transactions were reduced, and banks were directed to give moratoriums on loan repayments. These measures were crucial in preventing a reversal in the gains made in financial inclusion, especially in ensuring that the most vulnerable can continue to transact financially in easy and beneficial ways. Indeed, the response in the terms of the fiscal and monetary policy framework made Ghana one of the few countries in the world which recorded positive growth in 2020. Although the pandemic continues to weigh on the economy, data from the Ghana Statistical Service indicates that the country's economy is gradually recovering. Annual growth reached 3.1% in the first quarter of this year, with a target of 5% growth by the end of this year. Second question I would address is what new policies are governments considering to foster resilient national cohesion moving forward? As Ghana rebuilds, its focus is on long-term strategies to create resilient social, economic, and health systems. The Ghana Coronavirus Alleviation and Revitalization Enterprises Support Program, that is the CARES program, is expected to boost the productive capacities of businesses and key sectors of the economy. Under the CARES program, government plans to roll out supportive measures that will improve local demand, attract more investors, and most especially enable firms to upgrade machinery and retrain workers. Government will also complete the comprehensive legislative and institutional reforms of the Ghana Investment Promotion Center and the Ghana Free Zones Authority for Trade and Investment Promotion. In addition, government aims to boost domestic revenue by accelerating the implementation of the National Identification System, the Ghana Card, to broaden the tax base and passing the Tax Exemptions Bill to minimize tax loopholes and revenue leakages. One thing is clear: the pandemic has revealed the importance of digitization in reducing the costs of running brick and mortar businesses. Government will continue to support digital innovations with good governance and policies around data privacy, data sharing, and cybersecurity. These measures will better protect consumers and broaden access to affordable and beneficial services and products. The government will also engage key stakeholders in all sectors to consider new workable policy responses that will ultimately help reduce businesses' operating costs, create jobs, and improve affordable access to financial services and products, particularly for the most vulnerable. Without a doubt, evidence from research products, such as those conducted at the FCAB Africa, will be crucial in shaping future policy directions, making the establishment of the FCAB both timely and necessary. As we recover from the pandemic and its associated economic costs, everyone, especially the vulnerable families, will need access to beneficial financial services and the knowledge skills to make optimal financial decisions. Financial Capacity and Asset Building Africa has the vision to meet this challenge through building programs and policies that advance the well-being of all. We share this vision and call on all relevant stakeholders to engage and promote this laudable effort. With that, I declare FCAB Africa officially launched. Thank you for your attention. God bless you, and God bless our homeland, Ghana.
Thank you, Mr. Vice President, for your insightful and inspirational keynote. Thank you all, the incredible speakers today. You have given us hope for what we aspire for as Africans. As we end the launch programming today, now the actual work begins. The actual work of working with communities to build a curriculum and program that works for them. We look forward to collaborations as we work towards advancing financial capability and asset holding for all Africans. You can find our contacts and those of our partners in the launch program and also on our website, FCAB Africa. Thank you again for coming. Enjoy the rest of the conference programming FCAB to come within your country or community. Thanks again. Have a wonderful day.